My name is Noah Gillespie. Here I'm going to explain some of the things that you'd like to know about my accounting cycle project. So, first off, I'm going to explain the reasoning and process for a couple of my entries. So, I'll start off with number one. That one's pretty easy. So, first off, we invest $52,000 cash, a $21,000 computer system, and $8,000 of office equipment in the company in exchange for common stock. So we're going to go ahead and credit our common stock, even though we'll always debit first. So I guess we'll do a cash first. With that cash and debited, like it says right there, 21,000 for computer equipment, and then $8,000 for office equipment. And then we'll go ahead and credit common stock because that's what we exchange it for. Every balance needs to be equal at the end, even for these small journal entries. Then we paid rent. That was 3280. We bought computer supplies on credit. So accounts payable and computer supplies, prepaid insurance, and cash. We lost cash, so we credit cash. Accounts receivable, accounts payable. October 10th is interesting. It says that we hired Miss Lynn Addy as a part-time assistant. There's no financial craziness with that, so there was actually no entry required. Um, yeah. Over here, more stuff. Cash over here, we get more cash. We lose stuff from our accounts receivable because we did receive our cash. Um, yeah. So we keep going. We had one more of like someone else being hired. And you'd also like to know about any calculations or formulas used, include why and how they are applied. I did not use any formulas for this project. I just used the typical debit credit stuff. Yeah, unless the formula is, you subtract your credits from your debits to get your balance. Um, maybe or credits from your debits to get your balance. That's not a formula though. All right. Describe the purpose and effect of financial statements. So financial statements are very important. These are what federal agencies will look at to make sure that people are doing all their stuff right. Um, and if something buys something, you need to have a record of it, especially for a big company, because if it's not recorded in your system, it never happened, right? So it's important to have those documents saved. Um, okay, so closing statements. It's important to close all these accounts and stuff. This simplifies it way down for our trial balance and helps us to make sure that our totals are even, because if your debits are not equal to your credits, you have a problem. Either you've messed something up or you've messed something up. So if those things are not equal, you've messed something up for sure. Yeah. All right. Um, so why is all this stuff essential to accounting? So like I said, accounting, um, there's, forensic accounting, there's financial accounting, managerial accounting. Accounting is so important because it helps to keep records of things. So like I said, if you have a big company and you have literally probably 20 plus, probably like around 27 different transactions that go on in less than 2 months, that's going to be pretty important, right? So, or not pretty important. It's going to be a lot of things going on. And over time, you might want to either replicate those transactions because they worked well for you. Or you might want to just like see what you can change because it didn't work out so well for your company. So overall, it's very important just to be able to go back and look at what's going on. Also, if someone like um, let's say that we build IFM company. No, that's a bad example. Um, let's say that because we did all this stuff and we invested our cash, we got the computer system and 8,000 in common stock. Let's say that we didn't get the stuff and we still lost our common stock. So we need to have a resolution to that conflict and stuff, and make sure that everything is even and good. Let's see what else you want from the stuff. All right. Yeah. So just to amplify what I was saying earlier, why all these accounts are important. I like how we dumb down all of our accounts. These make it more readable for, let's say, like small business owners. So one of the reasons why I'm doing this class is because it's important. Even if I'm not going to be an accountant, it's important for business owners or managers to have at least some knowledge of financial accounting. That way, they can look at a sheet like this trial balance sheet and know at least a little bit of what's going on. So if they see that debits and credits are not lining up, they're like, "Whoa, like you're missing something. Like what's going on?" Yeah, and just closing these accounts and finding like the trial balance. This is just how I describe it is like a much dumber, like you dumb it down. So we start off at number one. We have every single journal entry, and that's the most extrapolated, expanded way that we can have all of these data entries. And then we break them down a little bit, and we break them into the accounts: the cash account, the accounts receivable account, the computer supplies, the prepaid insurance, prepaid rent, office equipment, computer equipment, accounts payable, common stock, dividends, computer services revenue, wages expense, advertising expense, mileage expense, miscellaneous expense, repairs expense for computers. And that's a little smaller, right? And then you break it down even more, and then you just have maybe 15 different accounts: cash, accounts receivable, etc. And you make sure that they're even. And that's what you show to your manager, and that's what they need to know. They do not need to know how we got all the numbers, but we have all those numbers in the background if they do need to know them. That's why just having the correct process for recording is so important for accounting in general. Anyway, thank you again for giving me this chance to do this assignment, and have a great day.